Right now, though, let's talk about whether or not we'll be praising the Bank of England just around that time when they announced their latest decision on interest rates. Let's talk to Julian Jessup. He's an independent economist. Very good morning to you.
Good morning.
Thanks for joining us. So all the expectations seem to be that we're going to get another small quarter point cut from 4.5% to 4.25% at midday?
Yes, that's right. And I think we'll definitely get a cut of at least a quarter point. Personally, I'd vote for a half point cut, but I suspect I would be in a minority. But in addition to the rate announcement, we're also going to get the latest set of Bank of England forecasts, which I think are going to be good news as well. I think they'll probably nudge up their expectations for growth this year and lower their expectations for inflation, particularly because global energy prices have been lower than they expected. So in a sense, it's sort of a triple boost to the economy, lower interest rates, a bit more optimism about growth.
And of course, the Monetary Policy
inflation.
Committee would have met yesterday before the news that's trickled out about this prospect of in a few hours' time of a US-UK trade deal.
Yes, that's right. I mean, the announcement is today, but the decision was actually made yesterday. So they won't have known about the trade deal, though frankly, I suspect that was probably anticipated. There's been speculation for some time that the US and the UK would agree to lower some of the highest tariffs that have been imposed, particularly on cars and on steel.
Yeah.
So it's not entirely a surprise. I still think the Bank of England will be, flagging up the downside risks to growth later this year if the global trade war does continue.
Yeah.
And even after the US-UK trade deal is confirmed, we're still going to have probably higher tariffs than we did before Trump was elected. So I don't think we can quite sound the all clear there.
No.
But again, that's a downside risk to the economy that I think is probably less severe now than it was, say, a month or two ago.
And indeed, we're also competing with everyone else on similar tariff or higher tariff levels as well, depending on how that all works out. There's also a prediction that Rachel Reeves, the Chancellor, is going to miss her fiscal rules. Now, again, can you just explain what these fiscal rules are? And are they rules that are self-imposed or do they actually matter?
Well, you're right. This is a prediction from the National Institute of Economic and Social Research, which is sort of a fairly well-respected think tank. And they're suggesting that the government will borrow something like 57 billion more in 5 years' time than is allowed under the fiscal rule.
Is that in total or a year?
In that year.
In that, okay. Yeah. Oh, wow.
Yeah. So that's a massive overshoot. Now, the problem there is the fiscal rule is a very strict one. Basically, the government has to balance day-to-day spending on things like wages and salaries in the public sector with tax revenues. Now, I personally think that's a very sensible target, but it does mean that the numbers are very sensitive to what you assume about things like growth and inflation and interest rates.
And everything was predicated on we're going to have all this amazing growth, which we simply haven't seen.
Yes, and that's where you can get into a sort of vicious spiral, or what some people call a doom loop, because the way that Rachel Reeves has approached this problem is that if she thinks she's going to miss her fiscal rules, she closes the gap by raising taxes. Now, that might work on paper, but in practice, of course, if all that does is slows the economy and hampers growth, you end up with actually a weaker economy and worse public finances than you would otherwise have done.
And that's obviously, it's fascinating. It's been the instinct for a lot of Labour MPs reacting to the local election trouncing of both Labour and the Tories by Reform UK last week. Oh, well, you should raise more taxes, spend more on public services, do this or that. But of course, if there's that extra borrowing, you could raise taxes, but we wouldn't see a penny of it because it's all going out in interest on those extra debts, isn't it?
And also, there's only a limited number of taxes that you could raise and realistically expect to get any additional money in. I know there's a lot of talk about raising taxes more on the rich, but it's not as if the rich don't pay taxes already.
And this is one of the most frustrating things. Is this idea of these mythical people who are just not paying a single penny when in fact they're paying 30% of all income tax in this country, the richest.
And also, like it or not, rich people tend to have more choices than the rest of us. So they have the choice about whether or not to expand or set up a business or simply move overseas.
And we have seen a massive exodus of millionaires, haven't we, from London in particular. Again, that will have an impact on the future dynamism of our country. And indeed, our youngest, brightest and best on whether they feel they want to stay here or, I mean, all these people going off to Dubai, because of the taxes here. In terms of the Indian trade deal, Where are you on this issue on terms of the national insurance that's sort of being paid for 3 years by Indian workers coming over from India back in India as opposed to here in the UK and vice versa for Brits?
Well, I'm in the unusual position here of 100% supporting the Labour government on this. And therefore disagreeing with a lot of people that normally I regard as allies. But I think the points about national insurance are widely misunderstood. The exemption, well, there is already an exemption for most foreign workers.
For a year, anyway.
Up to a year. So that's being extended rather than something that's new. But also, rather than providing a sort of competitive advantage to Indian workers, it's removing a disadvantage, because at the moment, if you employ an Indian worker, you basically have to pay tax twice. You have to pay social security contributions in the UK and social security contributions in India as well. So all this change is doing is actually just creating a level playing field for British and Indian workers. And in any event, it only apply to a pretty small number of workers who are typically highly skilled professionals.
Yeah, I mean, we kind of changed our view on this a lot yesterday, talking to people rather more knowledgeable about this than I think most of us are in terms of those trade deals. Julian Jessup, thank you very much indeed. We'll get that Bank of England decision very, very soon. Independent economist Julian Jessup, appreciate that. Philip Ingram, I mean, a lot of people, you know, every month waiting on that interest rate decision, people coming off fixed rate mortgages. I mean, there was a time when it was genuinely scary for an awful lot of people. Do you think we're getting back to sort of more normalcy on that and the inflation coming down? But are we seeing anything that resembles the sort of growth that we want to see?
Well, we're not seeing the growth that we want to see, and the whole of the government spending plans were based on a 2% or greater growth, and the statistics are showing we're not going to get anywhere near that during the time that this government's in. So they set the target and they're failing to achieve it. Interest rates coming down will be good for those that are hoping that mortgage rates will come down. The mortgage rates never seem to come down as fast as the interest rates
Funny
do.
that, yeah. Indeed.
But if you're the other side where you're saving, the savings rates tend to come down quicker than anything else.
Funny that. They always make money. That's why the banks have got those big shiny buildings with all the marble. That's on the chandeliers. That's the giveaway.
There are winners and losers, but
absolutely.
It's the wider policies on business that are just stopping the growth.
Absolutely.